Exchange. It's a building beat. Construction spending better than expected and climbing 0.5% from last month to just over $2 billion in October. That's a 5% increase from the previous year. We found out from Commerce this morning. The homebuilder stock's getting a lift on this. Shares of Meritage, Toll, KB, and Taylor Morrison all up 4% in the past month. Joining me now to discuss what to expect from the space next year is Phillippe Lord. He is the CEO of Meritage Homes. Phillippe, it's great to have you here. Welcome.
Thank you for having me. Good afternoon.
Good afternoon. A lot of people have been waiting for an inflection point in the housing market, which, you're in the new build category. It's been a little bit better, but in the existing homes and the thing over, it's been absolutely frozen. Who would have thought mortgage rates would still be this high?
I think most people did. Rates moved down earlier this year, but then they went back up. Even with the Fed cutting rates, mortgage rates really don't move off of that as much as they do off the 10-year. So rates are going to stay higher for longer. We expected that. Really, as a new home builder, we have a unique opportunity within that environment. As you know, we've been able to buy rates down for our customers, which is allowing us to perform better despite the existing home market really being locked in with all these folks sitting on a rate below 5%. When rates are this high, they just really have no motivation to move at this point. And that's created an opportunity for us as new home builders to really step in and fill that void.
Yeah, and you guys are really active in the Sun Belt, kind of in the southwest and even in the southeast. And those are areas, Phillippe, that lately we've been hearing about a lot more excess inventory, maybe more in the rental portion of the market, but that things have really cooled overall. Do you think that's true?
Yeah, inventory is definitely up across all the markets. Both existing home inventory is slowly coming back, and then new home construction is definitely up as well. But that's really intentional by all of us. We still see an opportunity to sort of fill that void by providing move-in ready inventory for all these customers that can't find that inventory in the existing home market, which is traditionally where they shop. So a lot of new home builders are building more speculative inventory to really fill that void. And we're all expecting a strong spring selling season based on what we're seeing today.
Right. Only 15, well, maybe almost 20 years ago now was when the spec inventory was such a problem as the housing crisis hit. Now it's completely the other way around, which is so interesting. How much can you buy down mortgage rates before you're not profitable on your home sales?
Well, it just really depends on so many other factors despite what rates are. But I think what we're seeing today is folks want something below 5%. And with rates in the high 6s or the 7s, we're able to do that in a profitable way. If they were to go higher than that, I would expect people to be okay with something more in the 6s. So I think people's expectations set over time as rates continue to stay elevated or elevate over time. But right now, as they're hovering within that high 6, low 7 range, we're able to really buy people down into something below 5%. Which really is the key to unlocking affordability for most of our customers, which are first-time home buyers.
Yeah, look, we could get there for mortgages overall. The 10-year yield has been retracing somewhat lately, as I'm sure you know. We were down to Friday, I saw 4.17. I don't know if that was just a kind of light trading day kind of print. But if you do that and then shrink the spread between, kind of the 10-year, the 7-year, whatever, and the mortgage rate, you could all of a sudden be talking about 5-ish on a national average. Wouldn't that be nice? I don't know if you view that as a real headwind, though.
Oh, I think that is nothing but good. I think anytime rates go down, it allows more people to afford a home. And so that's a good thing. There are a number of folks out there that need a home right now that simply can't afford a home at these higher rates. I also think unlocking the existing home market is also good. There are a number of folks that are living in their home right now and actually really need to move. They've had a life change event and they are looking for something different in their home, and they can't move right now because it just doesn't make economic sense for them. So I think lower rates are nothing but good for housing across the board.
Yeah, we had one builder analyst the other day suggest to us that they should write stimulus checks to people for selling their homes in order to just get that supply onto the market, maybe, give them the incentive as well. But the number would have to be quite large, I suspect, to move the needle. What about with the new administration? Anything there, whether it's from lumber tariffs to, catalysts like the one I mentioned, if they were to do something on the supply side for housing, anything you expect?
Well, I'm optimistic because I think a strong economy, low unemployment, and a strong consumer are the keys to a strong housing market. That being said, the fourth leg of the stool is affordability. So anything that the new administration does to impact affordability, both positive or negative, is really critical to our business. If things get more expensive and we can't bring supply to the market in an affordable way, that's not a good thing. But I think this administration is focused on deregulating certain things and possibly allowing us to bring more supply to the market, which is really the key to unlocking affordability. There's just more demand than supply today, and that's why prices are staying where they are.
And finally, is it true that you guys are doing a stock split? The shares are only, a little under 200 right now?
It's true. We announced that last week. Really, it's all part of our shareholder return strategy. Whether you look back over the last couple of years, we've implemented a dividend, we've been buying shares back, and now we're doing a stock split. It's all about returns to our investors and creating more opportunity down the road for them.
All right, Phillippe, thanks so much for joining us to talk about it. Really appreciate it today.
Thank you so much for having me.
CEO of Meritage Homes.